All right, everybody. Stocks by the numbers. Welcome back. Today is Monday, coming to you about midday. It's about 1:30 right now. We have earnings on deck, and we're continuing here with our little earnings reviews and updates here. And I'm just going to go ahead and give my prediction for a couple of companies here that are reporting today after the close. First company we're looking at is Arista Networks, ticker symbol ANET, listed here on the New York Stock Exchange. Stock right now 283.5. It's up about 1 point, little over 1/3% on the day. As you can see here, new 52-week high hit today, $292.66. Now, at first glance, looking at some of these numbers, we could, of course, make the argument that it's a little overinflated. However, we're talking about a tech stock, and we know that tech is the lone star winning sector under the Biden administration, as I predicted years ago when I saw that Biden was going to be behind the steering wheel as opposed to Trump. But let's not go down the political pathway here. We have a market cap of about $88.25 billion. We're sitting here trading about 47 times earnings. And the question is it deserved? And if we look back here, we can see the company beating very nicely on the EPS side for the last 4 straight quarters in a row. So obviously, they're doing something right. EPS estimates up again here, $1.70 expected for the quarter. And if we look at the yearly revenue growth, the company, of course, is doing something right, having a very nice 2022 here. The company kind of maintaining that low $2 billion mark for several years. 2021 up to almost $3 billion. 2022 north of $4.33 billion. Now, if we do a quick little arithmetic here, we can see 135 billion and 146, so what's that, 2.8 billion, and then we have 1.5, so now we're up to 4.3 billion, which is essentially what they made last year, and we still have Q4 coming out today after the close. And if we can look at the numbers here real quick, you can see estimates of about $1.70 on the EPS side, and on the revenue side, $1.534 billion. So they are expecting a little bit more of a jump here in revenue quarter over quarter, but just looking at the revenue growth, looking at the profitability growth, that net margin percentage just stepping up nicely, I can appreciate the fact as to why this stock has been climbing, and everyone kind of pumped it up and jumped in here at the open on anticipation that they were probably going to beat earnings again. Now, of course, it bounced around a little bit, kind of flattened out, but in my opinion, I would say that chances are they probably have a better chance to beat earnings, in my opinion, as opposed to miss earnings. But, of course, technically, $1.53 billion is the most that we're seeing going back these last several quarters. So it's going to be a little bit of a test for the stock, but overall, it does really look good. I will have to admit, is a company in the cloud sector, and we can see that some of these price targets are a little bit lower. Perhaps they weren't updated recently, but overall, everyone is basically giving it a buy or a hold. As we see here, we have 27 analysts total looking at the stock, 17 giving it a strong buy, 1 saying to buy, 8 saying to hold, 1 guy trying to be a genius and say to sell the stock. Now, of course, again, it could be viewed as overvalued, right? Because if we're expecting even, let's say, $5.5 billion to close out 2023, as you see the market cap up here at $88 billion, that's quite a high multiple. So I can appreciate the fact that some people may be expecting a little bit of a sell-off. However, I do always mention about consistency. And what we're seeing here is just consistent beats on the EPS and the revenue side. The company really kicking ass and taking names right here. And we can see even going back annually, look at this, the company has been coming in above analyst expectations for fiscal year revenue for the last 8 years in a row, going back to 2015. Now, even on the EPS side, we can see the company has been coming in above analyst expectations on the profitability side, and potentially starting to actually flatten out with expectations here going into 2020, and then coming out of lockdowns and whatnot, you can see the company actually pumped up their profitability even more. And look at moving forward, look at these forecasts here. Posting 458 above estimates of 438 for last year. Now they're coming in north of 6.5 per share. Look at this, 730, 828, 948. And the revenue is going to follow suit here. For the year, expecting 5.86 billion. That might be cutting it close. that might be cutting it close, but of course it depends if the company beats earnings. I believe we were already up to about 4.3 billion in change for the first 3 quarters. Now they were expecting 1.5 billion. Add that up, it's right about 5.8 billion. So if the company could continue these trends and come in 2, 4, 5% above this 153 billion number, then of course chances are, in my opinion, the stock is going to continue higher. But more importantly, they're going to beat that full year revenue number there of 5.86 billion. And then moving forward, we can see they're maintaining this trajectory: 6.5 billion for 24, 7.5 billion for 25, about 8.3 billion for 2026. So the rate at which this company is growing, and mixed with the fact that they've been consistently coming in above analyst expectations, even though we could make the argument again that the stock is potentially overvalued in the numbers, in my opinion, I would actually be a buyer here, especially going into earnings. I think that the company has a really, really good chance to beat analyst expectations. Look at the cash as well. Maintaining about 700 million back here, tail end of 22, right? This dark blue bar. Then you can see it jump up to 950 million, 1.25 billion, 1.75 billion. So the company's racking in several hundreds of thousands of dollars in, several hundreds of millions of dollars just in excess, quarter over quarter, growing nicely. Cash is king. That's what we always say, and it doesn't always just pertain to investors and traders like yourselves. It also is very, very relevant for these companies here. Having a couple of billion on cash may not seem like a big deal the way we throw around these numbers, these billions, these hundreds of billions or whatever. But at the end of the day, there are a lot of other companies out there, these small caps, these micro caps, couple of 100 million market cap, 1 to 2 billion in change market caps. This is where that cash can come in handy. Or, of course, it could be used to reinvest into R&D, right, which is research and development. But overall, we can see a little pullback here. We could potentially be setting up a descending triangle, potentially going into later afternoon. So we could actually break down, which, of course, if you're bullish on this and looking to step in on some shares or some calls going into earnings, then, of course, the lower the better for the dip here today, and then hoping potentially that the stock jumps up back into the 290s, and chances are easily could hit 300 plus. But of course, it all depends on the numbers. Earnings plays, of course, are completely a gamble, 100%. We know that 50-50, you're either right or you're wrong. So just looking at past performance, though, of course, as they say, past performance does not dictate future results. But overall, based on the numbers that I just saw, I would probably be a buyer and be bullish here on Arista Networks. We can see, looking at the daily, for the most part here, minus a dip tail end of September and a little bit before Halloween, we can see, looking at the daily, that those are really the only short-term points that the stock actually dipped below this mid-Bollinger Band here, this middle dotted line here. So the stock has been holding up and been staying very, very strong, in my opinion, even with the RSI at multiple points here for a stretch of time, getting above that 70 benchmark and staying there. So even with the RSI here at 70 today, I wouldn't even view that as a red flag, in my opinion, because obviously it meant nothing, in the last couple of months. But of course, more importantly, everyone's buying in and getting pumped about these earnings. MACD just recently crossed to the upside. That's what helped a little pop here today. But overall, I do like ANET. I cannot lie here. The RSI on the weekly is a little bit high. However, we have been up there before. This is why, again, I don't know if I would really use the RSI as my leading tech indicator here for this stock. The company has basically been riding along the top Bollinger Band here for, I don't know, 9 months straight, basically, for the most part. We had our dip here throughout October again, but even on the weekly, you can see staying above the mid-Bollinger Band. As soon as it dips down, it pops right back up. You had a dip down here, bounce, dip down here, bounce, dip down here, bounce, dip down here, bounce. This was the worst time for the stock going back just in the last couple of years, and that was the first half of 2022. So since the start of the second half of 2022, the stock has been absolutely on fire, raging almost 200% here from that $100 level up here to almost 300 today. MACD flying off the chart. So that's what I'm saying. In my opinion, ANET, chances are, if you were asking me, Calls or puts? In my opinion, I would go calls with ANET. Next stock we're looking at is one that we just looked at recently. There's a lot of trash and garbage that we know about. Next stock, Waste Management, ticker symbol WM, listed here on the New York Stock Exchange. Company set to post earnings here today after the close. Stock right now trading $187.71, down a little over a point, about 0.6%. And we can see that the stock is right near these 52-week highs that it hit just recently. And 52-week high here of $190.44. Now, in my opinion, as I said, when I first made the video, I think it's a buy. And this is very interesting. This is why I also speak about diversification, because I like to spread out and I like to look at stocks in all other sectors. And obviously, in my opinion, I'm kind of swimming against the stream here because, of course, if you pull up essentially any other finance hobbyist YouTuber, you will probably see that, of course, they are favoring the same 10, 15, 20 tech stocks because everyone is pumped on tech stocks. Again, Biden administration, just like the Obama administration, tech sector was predicted to be the Lone Star sector, and it is coming to fruition here. But more importantly, again, as I mentioned, diversification is key, and there is a lot of money to be made in other sectors as well. And again, Waste Management is a garbage company. And we could see here we have a market cap $75.5 billion. The company's paying out a dividends, yielding you about 1.5% from current stock market price. We are trading about 33 1/3 times earnings, which could historically be viewed as high for a company like this. However, again, they've been rolling on all cylinders and they've been coming in above analyst expectations. So usually when stocks do better on these earnings reports, you know, they have to be rewarded. I love the beta on this stock. This is another reason why something like Waste Management was always kept on my watch list for, I don't even know, 12 years or something. The beta here, 0.49. That means the beta, again, is the volatility of the stock in correlation to the overall volatility of the market. My apologies, Steam friend. But right here with the beta at 0.49, that essentially means that this stock is half as volatile as the overall market. So that is definitely nothing to sneeze at here. Company beating on the EPS side only 2 of the last 4 quarters. However, the revenue does seem to be pretty steady. The company maintaining this high $4 billion, now breaking in just in the last 2 quarters, breaking above the $5 billion mark here, $5.12 billion, $5.2 billion. And look at the profitability just completely rebounding here, right? Took a dip down from about 12.5% going into Q4 down to about 10%, and then has just beelined straight up over the last 4 quarters in a row. So the company looking to post $5.193 billion here on the revenue side and $1.53 about on the EPS side. So the EPS side, as we know, kind of hit and miss. However, it does seem kind of in line with what they've been posting for the last 2 quarters there, between like 150 and 160. So 153, in my opinion, if I was a betting man, I would probably say, in my opinion, that they're probably going to beat on the EPS side. But more importantly here, $5.19 billion. Like I said, they've basically been there for the last 2 quarters back to back. So in my opinion, I would more than likely expect the company to continue to beat revenue estimates, especially, again, looking at the annual growth. We've looked at this in the previous video we did when we spoke about WM, and we can see that revenue is now chunked up to that next leg higher, going from about 15 billion and change up to almost 18 billion, up to almost 20 billion. So the company is growing very nicely year over year. The net margin percentage hasn't completely rebounded for the year, was a little below 13%. You can see drops down to sub 10%, but the last 2 years in a row gets back above 10% and now above about 11.33%. So the company, again, seems to be doing a lot of things right. Essentially, whenever you bought it, you're up. Obviously, the company just hit new highs recently. You can see, again, we have the bulk of analysts basically saying to buy and hold this stock here. We have 23 total analysts, 9 giving it a strong buy, 2 giving it a buy, 11 saying to hold, and 1 going out on the limb saying, hey, I think it's a sell. We have the lowest price target here, 163. Average price target is basically right around where the stock is trading. So we could potentially make the argument that they are fair valued. However, again, because it is basically the leader in the sector, and they've been growing nicely over the quarters and over the years. Chances are, again, if I was a betting man, in my opinion, I would most likely say calls on WM as opposed to puts going into these earnings. If we look back here, we do have a little bit of a mixed result here. However, you can see when the company does miss on the annual side, it is by less than 1%. So even when these misses come in, they are very, very light, which is, again, reason enough for, in my opinion, to basically clarify this stock as being a nice long-term hold for you. Obviously, again, they pay you in dividends. They're kind of maintaining or growing in value. Forecasts continuing to move up higher here. Look at this for 23, north of 20 billion now, breaking above that milestone. And then moving forward, you're looking at 7-8% growth here in revenue year over year. 2024 up to 21.6 billion, 25 almost 23 billion, 2026 almost 24.25 billion. So this is a situation where obviously it would be more beneficial for you to own something like this in a long-term investing account as opposed to trying to do short-term trades. But I can appreciate the fact if some of you out there may want a little bit of action today and you may jump into WM calls here going into the close. But overall, in my opinion, I have to say I do agree with most of the analysts here that are keeping an eye on WM. And I say, in my opinion as well, especially for the long term, I agree that this is definitely a buy and definitely a hold. And if you can even begin piecing your way in here, and let's just say, hypothetically, they have a little bit of a light quarter here and they drop back to the low 180s, mid 170s. Yes, again, it is going to suck in the short term, but if you can begin piecing your way in and consistently buy these dips and average your way down for the longer term, chances are, if any of this comes to fruition, you're going to be in a good spot 1, 2, 3 years from now. And I know, again, a lot of people want those immediate reactions. What's it going to do today? Can I make a quick 50%? I can appreciate that. But I'm telling you, if you look at the way a lot of these stocks grow over time with the compounded appreciation, I am telling you right now, you may look back 2, 3, 5 years from now and kick yourself in the ass for not just accumulating a position and buying these brand name fundamentally sound stocks at a discount when you can get them. Now, I can appreciate the fact, again, WM is kind of right near the 52-week high, so it's kind of in its own category. But at the end of the day, like I said, garbage company, revenue keeps consistently increasing, and forecasts are showing nice positive growth moving forward over the next couple of years. So something like WM, in my opinion, I have to say, kind of a no-brainer, right? I would, again, say, in my opinion, probably calls going into the close, but anything can happen, random ad. And I just want to look at stock charts real quick. And we can see basically similar to ANET, right? We can see a stock that all the way back here, tail end of August, September, the stock was below the mid-Bollinger Band and had that big dip there going into October. But since that bounce, the stock, when it got below that mid-Bollinger Band, has immediately bounced up. And you can see that even when it tried to retest, it immediately popped higher because people are seeing the revenue growth and the forecasts moving forward, and the fact that the company, for the most part, is coming in above expectations and not at or below expectations. So I have a feeling that Wall Street is forecasting bigger and better things here. And if the company is able to beat earnings today after the close, in my opinion, 200 probably easily. And again, this is a slower, more steady mover, right? And I showed the beta, so it's much less of a volatile mover, right? It has far less pops and drops as some of these smaller or mid-cap tech stocks. So you're kind of going down a different avenue with this one. So I can't really say, 225 in the next 30 days, right? So I'm not exactly sure it's going to have that type of move. However, in my opinion, conservatively, over about the next month or so, if these earnings do come in well, 200 plus really shouldn't be an issue. And you could potentially get up to that 210, 220 mark on anticipation, with volume coming in going into next quarter's earnings, which of course would be about 3 months from today's earnings reports. But we can see immediately here on the text that the MACD crossed to the downside. The RSI kind of rejected off of that 70 benchmark, even though it touched and got above it multiple times. But the RSI pulled back to about 62 and a third right now. But in my opinion, I would still be a buyer. These long-term growers, this is why I always say, in my opinion, you really can't go wrong. Unless, of course, the company comes out and has a terrible quarter and then makes some horrendous negative announcement. But it's more few and far between than you might think. Here on the weekly, RSI up here at 73, still above our benchmark, so we can't really use it as an indicator. Plus, earnings were coming in, so people were piling in. MACD absolutely just flying high here, so of course we could have a hard break here and a hard cross to the downside, which could really beat the stock up back into the mid-170s, as I mentioned. But in my opinion, I would probably be more of a buyer here than betting against something like Waste Management. One more I wanted to look at here, actually maybe two or three more, but we'll see. Here is Lattice Semiconductor Corporation, ticker symbol LSCC, listed here on the NASDAQ. This is a semiconductor company, and we can see that the stock has been doing actually very well. Right here it's trading at about 71 and a third. It's up a little over 1.5%, about 2.25%, up a little over 1.5 points. Just about 2.25% here on the day, but chances are everyone is expecting bigger and better things from the stock. As you see, that's a 5-year chart. That's an all chart. We can see the stock really took a beating there in the first half of the 2000s. However, recently has been kind of rocking and rolling here, and I just want to show you. Right here we have a market cap of about 9.8 billion, companies trading 46 times earnings, and again we have a beta of less than 1. Looking at the profitability side, we can see the company beat on estimates for 4 quarters in a row now, and now EPS estimates slightly dropping down to only 45 cents a share. The company expecting about 45 cents a share on around 176 million in revenue. But more importantly, again, it is the annual growth here that, in my opinion, is really propelling the stock upward. And we can see that throughout 18 to 2020, the company was essentially maintaining around this 400 million mark. Then we jump up to north of 500 million. Now we jump up to over 660 million. So revenue has grown from 2020. Revenue is up 50% year over year, with the net margin percentage flying as well, as you see, bouncing around between about 10.75% and 11.6%, now jumping up to 18.6%, over 27% net margin percentage for 2022. So the company is growing phenomenally. And we can see, more importantly, on the quarter side as well, revenue climbing nicely here, 172, 176, 184, 190, 192. So now estimates drop back down to 176. So this is interesting because, in my opinion, you would assume that the company would beat no problem, right? Q4 last year, the company posted just shy of 176. Now estimates are just slightly above 176. So again, if I was a betting man, if you insisted on me making a recommendation, in my opinion, I would probably go with LSCC calls here today going into this earnings report. And I just wanted to look at the financials quickly because I believe, look at this, consistent beats on annual revenue, consistent beats on annual EPS, consistent beats on quarterly EPS, consistent beats on quarterly revenue. And of course, look at the debt here. It's been bouncing around, but it was up to north of $250 million as of 2022, sub 150 million. And if we switch over here quarterly, look at how they've been taking care of the debt while simultaneously increasing cash flow, right? So the debt right here, this pink bar, 168 million, 148, 122, 60, 18. 18. That, in my opinion, is phenomenal, because I know a lot of these companies just keep these billions of debt on their balance sheet, and I understand the way money works, and you can make the argument here in the States, oh, well, debt is cash, and debt is money. I understand all that. But at the end of the day, the lower it is, the healthier your company looks. So for them to take this debt up here, 160, 200 million plus, and bring it all the way down here to 18 million as of last quarter, that is phenomenal, in my opinion. And of course, looking at the this green bar here in the center, I want to show you the cash flow here. You can see a touch below 34 million, up to almost 64 million, over 74 million. And the cash and equivalents here, you can see maintaining that 100 million plus mark now for several quarters in a row. So the company looks to be healthy on paper here. Looking at their balance sheet, we have assets outweighing liabilities both in the short term and in the long term. And if we pull up the income statement here, all you see is green. That is all you see. Of course, as revenue goes up, cost of goods go up. Revenue minus cost of goods yields gross profit. Gross profit, excuse me, too much coffee. Gross profit consistently increasing. Operating expenses kind of following suit. You can see actually a slight dip here quarter over quarter from Q2 to Q3, which in turn leads to more and more operating income. Gross profit minus operating expenses yields operating income, which has basically been consistently increasing. Switching over here to the balance sheet, this is, in my opinion, basically the biggest red flag, even though the company has, again, look at this, for the most part, been maintaining and consistently increasing their asset value while at the same time taking care of that debt. Look at the chunk down in liabilities. Usually when you see companies try to kind of reel in their debt and increase their equity to try to pump up the book value per share for their stock, what you're going to see is as these liabilities go down, you'll also see kind of a sell-off and a drop-down in assets as well, right? So they may not want to get rid of certain assets, but if they're carrying, if they're supposedly viewed as like dead weight and carrying a big liability with them as well, then, they kind of just cut the cord and you may see a drop down in liabilities and assets as well. But that's not what you're seeing here. You're seeing maintaining essentially for the most part with growth in the asset column here, row, column, whatever. But at the end of the day, you're also seeing the massive drop down in liabilities. Look at this, just going from tail end of Q4 in 22, going into the first 3 quarters here of 23, liabilities are down 50% essentially from the same time last year, while assets have essentially been maintained in value. So, in my opinion, Lattice, however you say it, is actually looking very, very promising here, in my opinion. And if we come over here and just look at some of these metrics here very quickly, we can see the PE down here, sub 46. If you look historically, yeah, it was lower at one point, but for the most part, it's up here in the 50s and the 60s, right? So we could make the argument that it's ready to take that next leg higher. Price to sales down here at 13, of course, not the lowest it's been, but the previous quarters here up here in the high teens, even back here was north of 15. So we do still have some more growth here potentially coming for this company. Of course, if they beat earnings estimates here today after the close, T-minus about 2 hours. Trading 34 times cash flow, not the lowest it's been, but has been much higher here in the 40s and the 50s. Price to book is up here 15 times book. And again, has been lower, but for the most part, up here in the high teens and even breaking above to the low and even mid-20s at one point. So this is why we could potentially see a nice 10-20% move here easily from this level if the company comes out with good earnings estimates here. The return on assets slowly climbing. Return on equity basically maintaining that 40% mark. Return on invested capital slowly climbing. Gross margin percentage, look at this, 62, 64, higher 64 is right below 65, above 65, maintaining above 65, jumping up to 65.5. So this is what I mean. The numbers on this company, they're definitely moving in the right direction. So if you're going to ask me what type of stock should be potentially trading at a little bit of an overinflated valuation, it would be a company like this. A company that is just consistently increasing these profitability ratios, a company that is consistently coming in above expectations on the profitability side, on the revenue side, on the fiscal year revenue side, right? The company really seems to be doing everything right. I showed you the debt completely getting taken care of, falling off a cliff down to 18 million or whatever it was from 250 million. That's very impressive, in my opinion. The EBITDA, earnings before interest, taxes, depreciation, amortization, as we see here, climbing just steadily here into the 30s, getting above the mid-30 mark, 37, slight dip back down to 33, back up to almost 36. So, see, that's a really good sign as well. If the company even has a dip down in some of these metrics, some of these profitability ratios, as you see the dip down, what you look for is kind of that immediate rebound, right? That immediate pop back. And if they're able to do that and just say, yeah, last quarter was a rough quarter, boom, this quarter, we made it right back and we're back on schedule. When you have a company that's able to do that, that is a winner in my opinion. The profitability, again, dipped down as you see here, got slightly above 30%, dips back to the 26s, back up to almost 28. The one negative I'm seeing here is the inventory turnover, slightly decreasing for the most part. But going back, where is this? Q4, that's this column. As you see here, we're at 2.6, and we've kind of been maintaining that 2.6 mark, getting above 2.67 here for the last 4 quarters, basically for the most part. So now this was Q4 of last year, 2.67. So, obviously kind of hard to call, but in my opinion, I would probably say that the company is going to increase that number as well. But I'm very curious to see it. The asset turnover as well, basically how much money the company generates off of said assets. As we see, they've been maintaining their assets, limiting the debt, limiting the liabilities. So in turn, the asset turnover has essentially been consistently climbing here. 0.78, now up to 0.97. I mean, we're talking about what? That's like a 25% move easily. So the company really seems to be doing a lot of things well. And if we look here, again, we can see consistent beats here on the revenue side, consistent beats on the EPS side. If we switch over annually, we can see the company used to come in just shy of full year estimates on the revenue side for 16 and 17, but has been absolutely rocking and rolling since 2017. And we're talking 6 straight years, potentially making it 7 straight years today, if they beat. Switching on the EPS side, we can see the company consistently beating since 2019, basically turning it around, becoming more profitable, generating more and more revenue. And look at what is expected and forecasted moving forward. As you can see, 201, back down to 192, up above 229, and then 275 for the year, with revenue essentially maintained to kind of, set to be maintained over the next year or so, kind of holding the 740 million mark, and then looking to jump up to north of 830 million and 980 million. So again, we could make the argument that it is overinflated, right? We're talking about $750 million, 750 million, we'll call it for the year. We have a market cap 9.8 billion. So if a stock could go lower, it could potentially be a company like this. However, again, on the flip side, if you consistently come in above analyst expectations and consistently beat these estimates, then chances are you're probably going to consistently increase in value. So we could see a pullback here if they do come in light, but at the end of the day, it really seems like a lot of those metrics are looking well. And I'm not just talking about EPS and revenue. Again, we looked at gross margin percentage, operating margin, profitability. So a lot of those numbers, even when they dip down, have begun to rebound nicely. So you can't count something like this out. But you can see nice growth here, seeing a nice jump in revenue, almost doubling from 2020 in the industrial and automotive sector. So, if this company is now slowly becoming one of the players in the auto sector, then of course chances are those numbers will more than likely continue to keep growing, and the company will probably, in my opinion, beat earnings. Communications as well, you can see revenue up, what is that? It may be like 60% from 2020 here going into 2022. And of course, look at their biggest consumer here. It is China. And as much as something like this, in my opinion, may rub me the wrong way, I mean, growth is growth, right? So if this is the company who is one of them who is supplying these semiconductors and this tech to China, then as we see year over year, it has consistently grown. And of course, it grew here before Biden got in. So that's why the way I'm looking at it is we had consistent growth here year over year under Trump, who of course was very outspoken against China. And now Biden comes in with the hyperinflation. And what we can see is even further growth here going into China revenue year over year since 2020. So again, I mean, earnings, complete gamble. It's 50-50. You all know this. But I guess in my opinion, if I was a betting man, I would probably say LSCC calls here going into the close. Let's see what else we got here. We got good. Oh, wait. Actually, let's look at see stock charts very quickly. And we can see stock charts. We can see this big drop here in November. Now we've been bouncing, climbing up higher, kind of closed that gap. We just rejected off of the top Bollinger Band, sitting here at about 71. The MACD recently crossed to the upside. Everyone's kind of pumped about these earnings. This is what did I say? 10-15% should be no problem. Boom, 10% pop, right back up to that 200-day moving average, 77.80. In my opinion, that's easily where it could go. But of course, depends on the numbers. RSI basically looks like it consistently kind of increased for the most part here coming out of those earnings, but last quarter. But RSI sitting here at 63. Again, not really a main leading indicator, but I do always like to look at it just in case. But in my opinion, if they do come out with a nice beat, should probably pop that RSI up to that 70 plus mark. Should see about a 10% move to the 200-day, and then it could potentially cool down for a day or two, readjust, and then take it from there. But on the weekly, we can see RSI basically middle of the road here at 50.5. The company bounced nicely off of this 200-day moving average on the weekly, going back to about the tail end of 24, and has since stayed above and almost wanted to, but didn't quite retest that moving average. When was that? Yeah, it was about 2 weeks ago. So what we're seeing here again, we could see I'm basically expecting about a 10% move, and you can see top Bollinger Band at about 78.5, and 50-day moving average up here at 79.19. So in my opinion, that's probably where the stock is going to go, somewhere between, I'd say, about 78 and 79, if they beat estimates. If they happen to miss, because they are so overinflated, you could make the argument, they might really beat them up here and bring them down to 58 and have them touch that 200-day moving average. But again, that would be the first time in a while that the company disappoints and comes in below expectations. So if we're talking about a long-term hold, if they happen to come in light and it does take a hit, you know, we can reanalyze the numbers, reevaluate the situations. But overall, you know, it could be viewed a little high up here in the 70s. But if you bring me down into the 50s now, based on what the company has been showing us over the last couple of years, I don't know if that would necessarily, quote unquote, scare me out of the situation, in my opinion. I may potentially go in even heavier if you give me this situation up here in the 70s, but you give me the opportunity down here in the low 50s. I don't know. That one might be worth jumping on. But we'll cross that bridge when we get to it, of course, if they miss, if they drop hard, and depending on what the reasoning would be behind it, then we could potentially talk about that. But LSCC, I got to say, looking pretty decent. And I wanted to look at Goodyear Tire as well, a company that I always spoke about highly in the past. The problem is the inconsistencies here on the revenue side, right? Last time estimates were $5.3 billion. The company posted $5.14 billion. Very nice beat on the profitability side, but it's very inconsistent on the revenue side. As you see coming back here, big miss on the top and bottom line. Then before that, big miss on the top and bottom line. And then before that, it was like a great quarter, right? Yeah, we're profitable. Yeah, we made, you know, almost $5.4 billion. It's no problem. But it does seem inconsistent, and that, in my opinion, is probably what's keeping the stock basically flat since we originally looked at it. But overall, in the numbers, I do still like Goodyear Tire, but it's the profitability, it's the inconsistency in the revenue reports, it's the debt that they're holding on their balance sheet. So I can appreciate the fact as to why Wall Street is kind of keeping them down. However, I excuse me, I still do stand by my analysis that Goodyear Tire is just way too low. We have a market cap down here, $3.9 billion. And you can see 2 for 4, excuse me, on the EPS side, the last 4 quarters. And you can see revenue again up here, $5.3 billion, and then just kind of stepping down, $4.9 billion, $4.8 billion, back up to $5.1. But all of these quarters were light here for 2023. So we could have the potential to close out with a very nice 2024 and just kind of close out the year with a beat. In my opinion, the stock, chances are, if it was making these higher highs, could potentially get up here to like the 16s and maybe even 17s, depending on the beat. But we could also say, where is it? Why is it always inverse like that? I don't know. But we could also say that we have potential head and shoulder, but not really, right? That's not really a head and shoulders. But at the end of the day, basically, it's really not even about the technicals with this company. Again, it really comes down to the inconsistencies of the revenue coming in, and of course the profitability side as well. You can see the net margins. We went from net income positive down to negative here about 2%. 2 quarters ago, minus 4.25%, back up here to a little less than 2%. So yeah, not exactly a head and shoulders setting up for Goodyear Tire, but it's the numbers overall that are really hindering the stock. Now, the revenue growth that they're seeing from their tire segment has been very nice, but also at the same time, I mean, that can really be attested, that can be, oh my God. The reasoning behind it, of course, could be hyperinflation, because obviously the company's profitability is in the red. So we can't necessarily say that it's, corporate greed that kind of pumped up the revenue that the company is bringing in. So I feel like they're kind of trying to deal with the hyperinflation, so prices had to go up, but also at the same time, they're not trying to outprice the consumer. So kind of a double-edged sword here, but you can see on the revenue side here, missing 4 of the last 5 quarters. So I can appreciate the fact as to why Wall Street is not really rewarding this stock. Missing 3 of the last 5 quarters on the EPS side. Switching over annually, you can see the company actually coming in above expectations for the last 3 years in a row on both the EPS and the revenue side. But just seeing all of these misses here consistently quarter over quarter, in my eyes, it would be hard to call. But at the end of the day, it's also one of those situations where it's like they've been underperforming, they've been under the radar. You could make the argument that they're undervalued. So on a big pumped up estimate like this, 5.38 billion, if the company happens to beat this revenue estimate, that's what I'm saying. Chances are the stock's going to take off and it's going to fly up to like the 17s or something. So look, definitely, in my opinion, much more of a gamble on paper compared to the last couple of stocks that we looked at. But if you really want to take a gamble, I would say, in my opinion, you can go with GT calls. Chances are probably GT puts. But again, I just feel like the stock is just so undervalued here. Even with the misses, again, market cap sub 4 billion. The company makes 5 billion a quarter. And we can see, even on a revenue miss that I'm sure everyone was pretty upset about, you can see the stock actually went up and has been making, for the most part, minus this here, has been making higher highs and has been making higher lows. So this may be a situation where even if numbers come in slightly mixed, as long as however dark the cloud is, there is some sort of silver lining, then Wall Street may just simply reward the stock just because it's undervalued and they've been keeping it down for so long. And, even though the numbers are inconsistent and mixed, it's a necessary company, you know what I mean? That's what I'm saying. I have a feeling, I don't know why, but I have a feeling that GT may actually go up after earnings almost regardless of what is said. But honestly, again, in my honest opinion, looking at all of these stocks that we looked at, if you told me, to pick one that I had the highest conviction on, chances are trying to take an earnings play on GT today probably would not be near the top of the list, in my opinion. So I have less conviction on a Goodyear Tire play. But again, basically been looking pretty stable since November when they last reported earnings. We can see very nice bounces here off of the 200-day moving average, but it looks like it has recently rejected off of the 50-day moving average as well. This is what I'm saying. So it seems like Wall Street traders and investors alike are all just kind of mixed on GT. We could have traders piling in for earnings. We could have investors jumping ship just because they're aggravated and just basically their patience has now been exhausted over these quarters and these years that GT is not performing. But in my opinion, if they do happen to beat, again, a nice pop-up probably to the 15 should be no problem. You'll probably see a 10% move. And RSI down here, sub 50, middle of the road. Switching over here to weekly, we can see the RSI, basically same thing, middle of the road, sitting here at about 51 and change. Looks like a potential bullish hammer, actually, bouncing off of this 200-day moving average at about 13.5. And it looks like we're forming a bullish hammer here. But again, this is weekly, and it's only today, Monday. But hey, so far, it does look like a bullish hammer. So if the company does come out and beat earnings estimates, the top of this Bollinger Band on the weekly, in my opinion, really should be a layup. And you can see 15 1/3, probably no problem, in my opinion. The MACD has been slightly crossing up and then back down and has basically flattened out here. Everyone anticipating these earnings estimates. And of course, once we have the numbers, we're going to have a little bit of a clearer picture. And I know I've been talking for a very long time, but one last stock, Safe Bulkers, ticker symbol SB. Now, we looked at this company a while ago here. I don't even remember exactly when, but I remember that I think it was down here maybe in the low threes when I said that, in my opinion, I like the stock, and I think it's tremendously undervalued here. Their profit margins were phenomenal. And going back here, we can see nice beats there on the top and bottom line. Going back last quarter, nice beat on the revenue side. Big miss on the EPS side as well. But we can see revenue coming in here, $72.78 million. And EPS estimate 17.3 cents. So the company recently hit a new 52-week high up here at 430, and it has been trending up nicely since last quarter. And again, last quarter, you could say big miss on the EPS side, but I'm telling you, in my opinion, with these smaller cap companies, the revenue reigns more supreme, right? This is not a company, again, we could have one or two rough quarters here, profitability took a hit. Oh, we came in below estimates. It was a rough quarter on the profitability side. Okay, fair enough. But that's a little different than these other micro cap tech stocks who are just reinvesting the money that they don't even have back into R&D. And they're, like I mentioned, they're losing, $2, $2.50, $3 for every dollar that they make. So the losses on a situation like SB are nowhere near that extreme. And of course, with the profit margins being so well before that, you can't necessarily beat the company up too much for missing on an EPS side like that, especially since the revenue, in my opinion, the main bloodline of a company, has been consistently beating earnings estimates. And right here we have a market cap of sub $500 million. The company's paying you a dividend, is yielding out almost 5% of a dividend yield for you to own shares of this company. It's trading 6 1/3 times earnings. And that beta, look at that, less than half beta. Volatility of the stock in correlation to the overall volatility of the market. And technically on paper, it is half as volatile as the market. And again, EPS mixed, 2 of the last 4 on the beats. Revenue has been taking a hit here, going from 90 million down here into the 60s and 70 millions. However, they are consistently coming in above expectations. And again, as I mentioned, look at the net margin percentage, was north of 50%, 40%, and took a big hit coming down here into the 20s. But at the end of the day, that is still a very nice profit margin to have for your company, north of 20% and change. So definitely nothing to sneeze at, in my opinion. Let's check the forecast out of curiosity. Forecasts all over the place. And in my opinion, I just think it's because it's a company based out of Monaco. And I think that's what is probably kind of causing these mixed results. Because again, even though revenue has dipped down a little bit, look at this. This company is very, very consistent, and the only issue has really been the profitability side. So, yes, 4 of the last 8 beats/misses on the EPS side, but the revenue side cannot be denied. And jumping back up here into the 70+ million, if they beat, I think, in my opinion, obviously the stock is going to be rewarded. I still say, in my eyes, this is easily like a $6, $7 stock given some time. So, only time will tell, but the company's bringing in, now we're up to 350 million. We're taking a hit here with the revenue dropping down to sub 300 million for the year. But up here at, 300 million, we'll call it, with a market cap of 470 million. I mean, we could be talking about bigger and better things here for SB. So I still say, in my opinion, that this stock is a buy, especially for the long term. Obviously, earnings are unpredictable, but we come over here to stock charts. You can see very healthy bounce here after those last earnings. bouncing off of that 50-day moving average, staying up very nicely. Top of that Bollinger Band at about 4.5. So we could see, what's that? Could see maybe about a 6% move here, 6-7% move here after hours. MACD has been staying up for the last couple of months since last earnings report. RSI up here a little over 62.5. Hasn't quite hit that benchmark. Could get back up, of course, if the company beats earnings and takes a pop higher. RSI on the daily down here at 62. We hit a high of 4.25, top Bollinger Band 426. So it's just kind of riding high towards the top of the range, just waiting for another earnings beat, in my opinion, to take that next leg higher into the mid to high fours and potentially continuously hit these new highs for us. MACD recently crossed to the upside here. I think people are piling in anticipation of an earnings beat. But of course, again, just overall, possibly seeing what I'm seeing when I look at the company as a whole and basically just saying, this is a nice cheap stock. You know, it's only a couple of dollars a share. It pays me a dividend to own it. And overall, they've been coming in above estimates. And in the numbers, they do seem undervalued. So that's why I just feel like a lot of people are just piling into this stock kind of under the assumption that, hey, 1, 2, 4, 5 years from now, it is going to be, in a much, much better place than it currently is down here in the low fours. But only time will tell. But we're seeing a lot of strength here. Even above the mid Bollinger Band, you can see anytime it retests, it has those bounces. It breaks here basically just for a couple of days and then immediately pops up, tries to retest, gets back up, and then you can see, they tried to bring it down here to the moving average, and then it immediately bounced and got back above $4. And again, as I said, with stocks that consistently slowly climb, you see the increases in the 50-day and the 200-day moving averages alike. And now you can see the 50-day was all the way down here at about $3.15, we'll call it. Now the 50-day's up here at $4. Right? So now, potentially, worst case scenario, this could be viewed as one of your key support levels, even if the company happens to report light, and you can come in, you can see about a 5% drop maybe down to that 50-day moving average of about 397. But yeah, I spoke way too much, and what we just talked about, like 5 stocks, but I just wanted to look at a handful of companies that are reporting today and basically how I felt about them, what position, if I was personally going to get involved, what I would kind of be looking for. And again, ANET, been doing very well. Tech stock climbing up nicely. Chances are I would buy calls going into earnings. We have WM, Waste Management, recently hitting new highs. Been doing very well on the numbers side. In my opinion, I would actually buy calls on those as well. LSCC, nope, wrong symbol. LSCC, as we see, took a little bit of a hit from that almost $100 mark down here in the 70s. Could be viewed as overvalued, but overall has been climbing nicely over the years. And even if tech is overvalued, just like we see with NVIDIA, it may just keep climbing higher. So in my opinion, I would actually be a buyer of LSCC calls as well. Goodyear Tire is probably the one that I have the most pessimism about, because chances are they have a higher chance to come in light and actually drop down compared with a lot of the other stocks that we looked at. So if you're looking for a put play, you could say GT puts. But again, in my opinion, with these high estimates coming in, if the company happens to surprise and come in above those expectations, this stock is going to pop and fly. So maybe something like GT, I would actually consider straddling, as opposed to just saying, oh, I'm on this side of the fence, or oh, I'm on that side of the fence. And of course, we looked at SB Safe Bulkers, and in my opinion, undervalued overall. And even if the numbers come in mixed again here on the EPS and revenue side, chances are I still stand by my analysis and say that given some time, something like SB can easily climb into the 5s and into the 6s. But I'm going to end it there because I just spoke for like an hour or whatever it's been. So once again, so Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Best of luck to you.